Hello, and welcome everyone. If you're preparing for any major financial exam, you know this is a big one. Today, we are tearing down the latest SEBI Annual Report. We're going to pull out all the key facts, the numbers, the new jargon, everything you need to be absolutely exam ready. So, let's get right into it.
All right, let's start with a number that just, wow, 14.6 lakh crore rupees. Just let that sink in for a second. That's the absolutely staggering amount of money mobilized in India's capital markets this past year. This single number sets the stage for everything we're about to discuss, a year of record-breaking activity and incredible market strength.
So, here's our game plan for today. First, we'll get the big picture of the capital markets. Then, we'll zoom in on the asset management boom that's really driving things. After that, we'll look at how SEBI, the regulator, has been responding. We'll peek into their future plans, and then, most importantly for you, we'll wrap it all up with a super focused set of exam takeaways. Let's do it.
Okay, let's dive into our first section. This was a year that was really all about records and resilience. We're going to look at that massive fundraising activity and see just how the market held its ground, even when things got a little shaky. So, how does that huge 14.6 lakh crore figure break down? Well, look at this. Corporate bonds, or the debt market, were the absolute heavyweight, pulling in nearly 10 lakh crore. But equity fundraising also had a fantastic year at over 4 lakh crore. Now here's the exam point you have to remember. This total is a 33% jump from the previous year. A 33% increase? That's a huge vote of confidence in the Indian market. And speaking of confidence, the IPO market was absolutely on fire. India actually nabbed the top spot globally for the sheer number of IPOs launched. But the real story is the money. Funds raised from mainboard IPOs didn't just grow, they more than doubled to 1.6 lakh crore. And the SME segment, just incredible momentum there as well. This is a 5-star must-know fact.
Okay, another key piece of jargon you'll see is QIP, Qualified Institutional Placement. The easiest way to think about it is as a special, faster route for companies already on the stock exchange to raise money directly from big, smart investors, like mutual funds and insurance companies. And the fact that fundraising through QIPs nearly doubled to 1.35 lakh crore, well, it just screams that the big players had sky-high confidence in the market.
Now let's talk about the secondary market, where we all trade existing shares. This year was a real story of two different markets. The first half felt like a rocket ship. Indices were up 16% thanks to strong domestic growth. But then the second half hit, and we saw a sharp reversal. Why? Well, global tensions and worries that Indian stocks were getting a bit too pricey led to a lot of foreign investors pulling their money out. And this chart tells the most important story of the year. This is what we mean by domestic resilience. While foreign portfolio investors, or FPIs, took out a massive 1.3 lakh crore, look at who stepped in. Our domestic institutional investors, or DIIs, think our mutual funds and insurance companies, pumped in a record-breaking 6 lakh crore. They literally put the market on their shoulders and prevented a much, much bigger crash. So, that raises a pretty big question, right? Where did all that domestic firepower come from? Well, that brings us right to our next section. It was all fueled by an absolutely massive boom in our asset management industry. This is truly the story of the rise of the Indian retail investor.
I mean, just look at these numbers. The growth is staggering. The total assets under management, or AUM, of the mutual fund industry has nearly tripled in just 5 years. Tripled. It shot up to over 65 lakh crore. And this isn't just a few big players. This is because the number of unique investors has doubled to 5.4 crore. And everybody's favorite, the Systematic Investment Plan, or SIP, has seen a massive surge.
Now, it's not just about mutual funds. Here's another key term you need to master: AIF, or Alternative Investment Fund. These are a different beast. They're private funds for sophisticated, high-net-worth investors. And they pour money into things you don't normally see in the stock market, like startups, private companies, real estate, and big infrastructure projects. They are a huge engine for growth.
And the growth story here is just as mind-blowing. Look at this timeline. The total money committed to AIFs has just exploded, going from under 4 lakh crore to a whopping 13.5 lakh crore in 5 years. This tells us there's a huge appetite for these alternative investments, and they're becoming absolutely crucial for funding India's long-term growth.
Okay, so you have this incredibly dynamic, fast-moving market. What's the referee, the regulator, doing in the middle of all this? That's what this next section is about.
Let's break down CBI's most important policy actions this past year.
So you can group all of SEBI's actions under these 4 main pillars. Now for your exam, here's a simple way to remember them. Think of the mnemonic FFEE. SFEE. Why? Because SEBI sees to it that the market is safe, fostered, easy for business, and empowering for investors. SFEE. That should help it stick. All right, pay close attention here because this slide is an absolute goldmine for potential exam questions. These are some of SEBI's brand new initiatives. You've got MF Lite, which simplifies rules for index funds. SIFs, a new product that fits between mutual funds and PMS. Parva, a new agency to check if advisors' performance claims are actually true. Mitra, to help you find lost or unclaimed money. And Choti SIP, making it possible to invest with as little as 250 rupees. You have got to know what each of these means.
Okay, so that's what SEBI has done. But a good regulator is always looking forward. So now, let's take a look at what's on the drawing board. What are the big reforms that SEBI is planning for the next year?
Now this is a big one, a very important proposal called Swagat Fi. And honestly, the name says it all. Swagat means welcome. It's designed to roll out the red carpet for trusted, low-risk foreign investors. Think giant sovereign wealth funds with a super simple single-window entry process. This is all about improving the ease of doing business and attracting more stable, long-term foreign capital.
And believe me, the future roadmap is absolutely packed. SEBI is planning to do a complete review of the rules for company takeovers and even the foundational mutual fund regulations from 1996. They're also thinking about letting foreign investors into more parts of the commodity markets and maybe creating a simpler set of rules just for AIFs. And of course, big tech upgrades are always in the works to keep the whole system safe and efficient.
All right, team, this is it. Time to consolidate everything we've talked about. This section is purely for your revision. No extra fluff, just the absolute, must-know, critical points for your exam all in one place. Let's lock it in.
Okay, get ready to screenshot this or jot it down, but you need to burn these numbers into your brain. Total funds raised, 14.6 lakh crore. Main board IPOs, 1.6 lakh crore. Corporate bonds, 9.9 lakh crore. The FPI outflow, 1.3 lakh crore. And the hero number, the DII inflow, a record 6 lakh crore. Finally, mutual fund AUM at 65.7 and AIF commitments at 13.5 lakh crore. I guarantee you'll see some of these figures in your exam.
Next up, the key terms. You don't just need to recognize them, you need to know what they mean. So let's do a rapid-fire round. AIF, private funds for big investors in alternative assets. QIP, fast-track fundraising for listed companies. REITs and InvITs for real estate and infra. MF Lite, SIF, and Parvit, all new regulatory initiatives. And Swagat Fi, making it easier for foreign investors. Know these inside and out. And finally, let's connect all the dots. Don't just memorize facts, understand the story. And the big themes are clear. First, the incredible power of the domestic Indian investor. Second, our markets are getting deeper and more diverse, moving beyond just stocks. Third, SEBI is pushing hard to make rules simpler and business faster. And fourth, everything comes back to protecting and empowering the small investor.
So I'll leave you with one final thought to ponder. We're seeing this historic, structural shift where our own domestic money is now the main force driving our markets. So the big question for the future is how is this going to redefine India's power and position in the entire global financial system? Something to think about.
And that wraps up our deep dive into the SEBI Annual Report. I really hope you found this breakdown useful for your prep. For more explainers like this, make sure you check out the other videos on our channel. And if this helped you out, please do me a huge favor. Hit that like button, share it with your fellow aspirants, and of course, subscribe for more. Thanks for watching, and all the very best with your studies.